Good evening to everyone. Welcome to Financial Reporting, ITC board course. And I think I congratulated everyone on the first mock test exam that you wrote. Okay. So I think again, just to repeat, congratulations to everyone. If you're sitting in this room, then that means you made it to ITC. Now, before we commence, can I kindly ask you not to focus on your scripts for like 30 minutes? Okay, so your script, you can put it upside down. Don't look at the mark. Don't worry about the mark which is on the script. I want us to talk about something else besides that mark. Then later on we can come back to the marks. Okay. So, I just need to talk a little bit about ITC. The difference between CTA and ITC. So if I'm going to talk about something which is familiar to what Elliot talked about on Tuesday, please just stop me and be like, you already know that. Okay. Because I'm not quite certain what you talked about. Okay. But my objective today is, I want to talk about two things. Firstly, I want to talk about between now and the 29th of January. What is it that you need to do? So what are the expectations which are there when you get to ITC? Then that's going to take probably 1.5 hours. And then after that, we're going to talk about the mock test exam that you wrote the previous weekend. What are some of the challenges that you faced? How can you fix that? What are some of the principles and challenges that I also noticed from our marking process? Okay. Now, to start the session, the first thing that I want to talk about is there's been some changes which took place. If you were privy to the national budget which was announced last month, I'm sure you know that there are a number of changes which took place, especially from a taxation point of view. I think our corporate tax changed from 25.75 to 24 point. Then our VAT from 15% to, okay, awesome. And then a number of other changes. So I just need to clarify in terms of what is it that is going to be examined on 29 and 30 January 2020. And what is it that you don't know? We have got minor changes and we've got major changes. All minor changes which take place, they need to take place for a period which exceeds more than 12 months for them to be examined. Which means from the time that we make a change, we give you 12 months ahead of time for you to study the change before examining it. But if it's something which is critical or something which is crucial to ITC, then we give you 6 months to study that change before it's examined. So you're always informed in terms of what is critical and what is minor. Now, when you look at the national budget, it came out in November. Now, regardless of whether the changes in November are major or they are minor, all of them, they do not exceed 6 months. You agree? Okay. So what it means is, when you get to ITC 2020, don't stress about the changes which came as a result of the announcement of the national budget. And the second part is, the announcement of a national budget is called the national budget statement, which means it's not rule, it's not yet law, because it has not yet been passed or signed off by the president. So as of now, that 14 point something for VAT and that 24 point something for corporate tax, that is not yet law as yet. So do not apply that when you get to ITC 2020. Okay, is that clear? All right, great. So that means anything that you learn during your CTA is exactly what is going to be applied at ITC. We've got a new Companies Act which also came through I'm sure the audit guys might have said a bit about the changes to the Competence Act. The new Competence Act is not examinable from the ITC General 2020 point of view. So also don't worry about those changes which are coming through. Okay. So I think as of now, there are no stress points in terms of what you learned in CTA and what's expected of you at ITC level. Exactly the same thing that you learned is exactly the same thing which is going to be examined. Right. So I'm going to clarify that first. Then the second part that I want to look at is you have successfully completed your CTA program. Now you're going to ITC. Now, before we go to ITC, you got a 2.5 months gap between CTA and ITC. And the question is, what exactly are you supposed to do within the 2.5 months? Now, there's nothing new besides CTA that is coming through at ITC. But I just want to re-emphasize some points which we may not have emphasized or not at CTA level. And the first thing that I want us to talk about is the examination is called ITC. Now, what does ITC mean? Like when you hear the acronym ITC, what does it mean to you? Initial test of competence. So if it's an initial test of competence, that means the whole examination is trying to assess your level of competence. Now, do you know the competence is what they are trying to assess? You need to be clear in terms of if it's an initial test of competence, then that means there are two examinations which are going to test competencies. The initial one and the professional one, which is the second qualifying exam. So at initial stage, what are the competencies that they focus on? So that between now and the 28th of January, what you need to make sure is you polish up on those competencies, which they're saying these are the initial competencies that we're testing. So as a way of sharing, are you aware of any of the competencies that you think these are the things that they're saying we initially test? Often. What are the competencies? Because if you're not sure right now, that means by the time you get to ITC, they're gonna initially test you the competencies that you don't know. Does it make sense? Okay. So I need us to be clear today, before we go for Christmas. What are the competencies that they say we initially going to test you? Okay, great. So your ability to apply technical knowledge. You can't hear it. Okay, and he says volume up.
I think they will be testing our ability to apply our technical knowledge.
Okay, so she said you need to sit up front. Okay, so just to repeat, she said the ability for a student to apply their technical skills into real life industry. That's part of the examination. What is technical? Is there anything else besides technical?
Time management.
Time management, yes. 2. What else? Thank you. The ability to integrate various skills from various core components like your financial reporting, your taxation, your management accounting, your strategy, your governance, as well as your auditing. Is there anything else outside that? What other skills? Anyone? Yeah?
Communication skills.
Communication skills. So the ability to communicate at a professional level, how good are you at that? That's part of the skill that they're also examining. Is there anything that we might have missed? Critical thinking, thank you. Are you able to think outside the box? So there's a black and white area. What about the gray space? Anything else outside that? None. Decision making. Thank you. Are you able to make decisions? Applying yourself to the scenario. Thank you. Don't regurgitate your technical or memory dumping. That's what they commonly call it. All right. So I think we have raised a number of things that that cover part of the technical skills which are there. So at Cypher and at ICAS, they break the competencies into 4 major skills. Which number 1, your ITC is going to examine you on your ethical behavior. So to what extent do you uphold your ethical values? And this will be examined to the extent of 5 to 7% of the paper. Which means if your paper is out of 400, how many marks do you have allocated to ethics? 20 marks, minimum. So if you do not make sure that between now and 28th of January, you understand how to answer ethics questions, that means you've got 20 marks that you potentially lose. Then the second part that they also examine you on is your personal skills. Now, what do they cover when you talk about personal skills? Personal. From a CTA, what did your lecturers teach you about personal skills? Don't ask me what I told you. Personal skills? This is a bad signal. Leadership, teamwork, yeah. Presentation skills, anything else? Okay, so your personal skills are looking at your personal attributes. What are the things that you need to demonstrate as a person? We should say, these are my attributes. This is what I'm known for. Okay. We'll talk further about what exactly they will examine you on personal skills. Then professional skills as well. At a professional level, how are you supposed to handle yourself as a professional? Then the last part is your technical skills. Now, when you look at the 4 skills, there's a spread of marks in terms of how they're distributed. Unfortunately, what happens is we spend 99% of our time focusing on technical skills. So we want to try and understand what is FC error. How do you treat FC error? What is deferred taxation? That is technical. And whoever you did your CTA with already stamped that your technical is good. So if we keep on hammering and hammering and hammering on technical, what then happens is the other 3 skills are not refined. And if these other 3 skills are not refined, there's no way you're going to pass your ITC. So when you speak to all of the people that have failed ITC as of now, the reason is because they've been focusing too much on technical. And silent ITC is not worried about just your technical. They're worried about beyond your technical. So now, going back to what I need you to do. Your study plan between now and the 20th of January should have spread in terms of how much have I practiced on ethical dilemmas, how much have I practiced on personal attributes, how much have I practiced on my professional skills, on top of already the technical skills that I'm already practicing on. So what I'll do is I'll share a bit on exactly what are the competence areas at each category and how are those competencies assessed at ITC level. Starting at technical, then we go to professional, then we go to personal attributes, then we go to technical. Okay. Now let's start with our ethical competencies. So for ethics, Psycha and ICAs are mainly worried about your ability to apply ethical reasoning. And remember, when you talk about ethics, we're saying there's a dilemma which is there, where you need to make a decision, but that decision is going to make someone upset at some point. So it's either you're going to make a decision which benefits yourself, or you're going to make a decision which benefits someone else, but doesn't benefit you. So how good are you at reasoning to say, I'm going to take the fall for the benefit of someone else? That's basically the concept of ethics. So the good which is going to happen, is it going to benefit the majority or it's going to benefit the minority? So we always talk about an ethical triangle where you look at good for self and for others. And you need to demonstrate that in your application of your knowledge or in your responses. Now, what we then do is we've got guidance in terms of how to apply a decision in terms of ethics. So we've got a national code of ethics that we apply. The ICAS code of ethics, the CPC. But that's only one tool which we apply in terms of making a decision related to ethics. So your CPC focuses on what are the things that a chartered accountant is supposed to consider. Then you talk about your integrity. What else do you talk about? Your professional behavior. What else? Do you care? What else? Yeah, all of those things. But that's only one component where you're saying ICAS is saying abide to these. Now that's not the only documentation which talks about ethics. How about the Competence Act? Are there certain provisions that you need to abide to from the Competence Act point of view which ensure that you make an ethical decision? What are some of the things that we know from the Competence Act? Competence Act, when one is making a decision, hello? Do you still remember the talk about fiduciary something? It applies to if you're a director. So if you're a director, there are certain expectations which are there when you're making a decision. Where the law is expecting that any decision that you make on behalf of the company is not for your own personal benefit, but is for the benefit of the majority or the stakeholders. Which means when we talk about ethics, to what extent are you able to reason? To what extent are you able to make the decision for public interest or for the majority? And are you able to exercise your duty, maintain objectivity and independence? This is coming from the CPC. Maintaining and enhancing professional reputation. You're not supposed to put the profession into disrepute. And then adherence to laws, professional standards. This is the Competence Act coming through. So all of these now, they are repackaged into this scenario. And then the examiner is saying, your exam will incorporate situations of ethical dilemma. When you're given a scenario, and they ask you, what would you do? Or do you think the finance director in this case made an ethical decision? And you'll be expected to exercise good ethical reasoning throughout by applying the documents that you have as a chartered accountant, as well as, besides being a chartered accountant, the office that you hold. So for all the 4 papers, you're going to write paper 1, paper 2, paper 3, paper 4. Each paper is going to have 5% relating to ethics. Which means if you don't study ethics, you've got 20 marks that you've thrown down the line or down the drain. Remember, how many marks do you need to pass? 200 marks. Now 20 out of 200, that's a lot of marks. Agreed? Okay, great. So that's the first expectation that I have for you. Between now and the 28th of January, make sure that you don't lose the 20 marks for ethics. These ones are already marks that you've obtained. All right? Guaranteed, these are going. Then the next part is, let's talk about your personal attributes. So when ITC tests its personal attributes, they're looking at your ability to manage yourself. You're going to get a 100 marker question, which you need to write between 3 hours. Now, it's not mandatory for you to read for 30 minutes. You can read for 1.5 hours. Agreed? Okay, it's not mandatory. But it's your skill in terms of how do you balance between reading and understanding the scenario versus answering the question. How much time do you allocate to those two? Now, one of the things that people have struggled with over time is people think that reading time is 30 minutes, which means at the end of 30 minutes, stop reading, start writing. And I've always emphasized this at CTA level. You cannot write on something that you don't understand. So if 30 minutes is up and you're not done reading, continue reading. But you cannot read the scenario which is allocated 30 minutes and read it in 1 hour. And that doesn't make sense. So outside the exam, this is the time for you to practice on your reading skills. Because remember, the exercise is not just about, I got 7 pages, I read 7 pages, I completed 7 pages. That's not the objective. The objective is you read 7 pages in 30 minutes and you understood. I'll talk about some of the things that have made people fail ITC that we've noticed at the time that we mark ITC at site. Then your demonstration of responsible leadership, that is, it will be examined by looking at challenges on certain decisions that may have been made by the accountant. I think this will apply more to much of your decision-making processes in math. And then expert advice. This always comes in Finnac, where we ask you to advise someone on the correct accounting treatment of something. So the language should be talking to giving advisory services. Then lifelong learner. Now this is one of the areas that have always made people repeat year in, year out. Now what lifelong learning says is, you are not expected to be taught everything in class. There are certain things that you're expected to know just by working in the accounting profession or in the commercial field. For example, in 2017, they brought in a case study about an airline company, and it was in a math paper. And we're looking at some of the risks which are associated to that airline company. Now, lifelong learning says you need to be privy to the things which are happening as of today in the industry you're operating in. Now, when you look at airline, what is one of the selling points for airlines? Vis-a-vis your traditional buses. Why would you say, I want to go to SA through air rather than through road? It's an issue of convenience. What's the convenience that you're looking for? Time. Which means if there is a slight delay in terms of the boarding time, that compromises the whole business of an airline. Do you agree? So that minor understanding that I need to understand how an airline works suddenly changes things. So people were not able to pick the risks related to the time when you're relating to airline business because they lacked the understanding of how the airline business works. So when you look at the statistics for ITC, normally the white guys do it better than the black guys. And it's simply because as black people, half of the time we've been in combis and we've been in buses, and those guys are gonna hit the door until the bus is full. And we've got no issues with it. Now when you're taking into a scenario where you are the one who's managing the business for an airline, you don't see anything wrong with time. So those are some of the mindsets that we need to change. So one of the things that we emphasize at ITC board course is, for every case study that you're gonna read, understand the business aspect of that case study. How do they make money? So that you understand what compromises our model of making money. Happy with that? I'm sure Elliot talked a bit about business model on Tuesday. Did he? Confirm it. He did talk about business model. Hello? He didn't? Really? Okay, so your understanding of the business is very important. Okay, I know this class is for Finnac, but I need to talk about this because your ITC is going to have a majority of decision making marks. If you don't understand the business, you're going to fail. Right. Then, a part of lifelong learning. Did anyone look at the January 2019 ITC paper? Did you look at that paper? Okay, great. If you looked at that paper, in paper 4, you could realize that there was a software which was developed. I still remember what it was for. Now, what they did is they asked you to look at the controls which are supposed to be there in that software and how to audit the risks which are associated with that software. So now, we have moved from a traditional accounting setup where we put controls in terms of human intervention. So you got someone who's a preparer, and then you got someone who's a reviewer, and then you got someone who then raises the journal entry in the system. To a situation where we have got a software which captures data, has got controls to review and reconcile data which has been captured and data which has been reviewed. So the whole processes of data capturing, review, authorization, and finalization are all within one system. Now, how do you audit such a system? Which means you can't be talking about, we need to look at the level of education of the people in the accounting department. That doesn't work anymore. You agree? But rather you need to switch and you go to CATs. I'm sure that whole scenario was about a hotel, and I'm not quite privy anymore to what was happening within that hotel. But for example, when you look at today, when you get into a hotel, you don't have a security guard standing at your hotel door and saying, show me your invoice. They give you like a card, which you simply go and like, you get inside the room. Makes sense? Which means now you need to talk more to what are the computer-assisted audit techniques rather than our traditional audit techniques where we looked at to go on leave. This guy's not going on leave. This is a high risk. Still remember that? Okay. So that talks to lifelong learning. From lifelong learning, we're talking about what is the technology which is there. How is technology affecting accounting? How is technology affecting auditing? How is technology affecting decision-making process? We're still together? Okay, great. So I'm not going to spend too much time here. Then managing time effectively. If you have not been finishing your CTA exams, then that means that's one of the things that you've not been doing very well. Professional skills. Some of the areas around professional skills are your ability to gather and develop accurate and relevant information and ideas. Now the way we examine this is we look at your ability of the student to go through the case study, understand it, comprehend it, and identify information which is relevant. Now, regardless of whether you did UNISA or you did CTA, I'm sure your lecturers emphasized on one common thing. Before you start answering, did you understand the scenario? Confirm they talked about that. After that, they talked about, did you understand the required? Confirm? After that, they talked about, before you start answering, you put ink on the paper. Did you plan your solution? After you've done all those three, then that's when you start answering. So that you don't waffle. You don't talk about things which are irrelevant. So, as a professional, one of the things which frustrates when you're a professional is, you walk into someone's office and you say, I want to pay for your service. Then people start offering you something that you've not paid for. So it's very important that we get to manage that skill. Understand the whole process before you give your feedback. I'll highlight some of those when I look at the feedback from your ITC members. The development and understanding of the ITC environment, I think we've touched a little bit on this. Examine and interpret information and ideas with critical thinking. How are you able to correlate information policy? Which means for all the standards which are examinable, your IS1, your IS2, your IFRS 5, your IFRS 8, your IS 8, your IS 7, your IS 12, your IS 16, your IFRS 16, all of the standards that are covered, you should be able to write an accounting policy for that transaction. You should be able to evaluate an accounting policy which has been written by someone else. Then you should be able to account for your routine and non-routine transactions. Remember, when you talk about accounting treatment, it's your recognition, your presentation, your classification, your measurement, your presentation, and your disclosure. For both routine and non-routine. Routine, that's undergrad stuff. Non-routine, that's your CTA stuff. So we're expecting you to be able to write an accounting policy on FCTA. If you can't do that, you're not ready. Then you should be able to prepare or evaluate a note of disclosure. So if today we say you've got consolidation that have taken place, what are the disclosures related to consolidations? Which means I expect you to write down a disclosure based on IFRS 12 or to evaluate a disclosure based on IFRS 12 for the purposes of the P&L and the SFP. I still expect you to be able to do disclosures for consolidations based on IS 7. Still remember those disclosures? If you can't do them or evaluate them, you're not ready. When you look at January 2019 and June 2019, they repeated one common disclosure based on lifelong learning. What are the common issues that have been happening in 2018? That's what they examined in 2019. So the common issue which has been there, your examination is set in South Africa. One of the biggest stories in South Africa in 2018 was the Guptas. You still remember that? And state capturing, which was talking to related parties. So both January and June 2019 ITC was focusing on how can we make sure that our financial statements have got proper disclosures related to related party transactions. That whole thing even filtered beyond Guptas. As of now, confirm you're all privy to the Tonga Triulet story. They've got revenue issues, IFRS 15. But the problem was not with recognition, the problem was with disclosure. How do I know that the revenue that you have put in there is actually revenue? So disclose what made you say that I've got revenue. Accounting policies were issues in terms of your Tonga Triulet. At what point do you say this is revenue? What is your policy there? Which means if you can't evaluate the policy of Tonga Triulet, you will not find issues with their revenue system. Then maintaining awareness of key ideas and principles for all financial reporting standards, blah, 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 blah. And that's part of your check now. So that's relating to financial reporting. Now, one other area that I think people have not been focusing or putting an eye on is when you go to math is one course, but it's 3 different competencies. So for math, they will want you to focus on strategy and risk management. Outside that, they also want you to talk about financial management. Outside that, they also want you to talk about management and decision making. 3 different areas, one course. Which means when you're studying math, you need to be clear in terms of how much time did I allocate to strategy? How much time did I allocate to decision making? And how much time did I allocate to your financial management? And also you need to be clear, what is the difference between strategy? What is the difference between strategy and decision making? What is the difference between strategy, decision making, and financial management? So from your CTA, how much do you know of the differences between those 3 areas? Because if you're not clear, then you're in trouble for your ITC. Now I'll give you, for example, I'm going to look briefly at strategy, then I'll look briefly at decision making. I want you to see the differences. When we're examining strategy, we are focusing on assessing whether management decisions align with the entity's vision, mission, and values. Understanding and evaluating the external influences on the entity's strategy. Understanding and evaluating the internal influences on the entity's strategy. Understanding and evaluates the business model for the entity in the context of the entity's vision, mission, values, mandates, and overall objective. Identifies and evaluates opportunities and risks stemming from strategy. Understands the entity's IT strategy. Now, we can go on going down this. There's one common thing which is there. When we talk about strategy, we are not talking about today. We're talking about future. Which is why always, when we talk about strategy skills, we're talking about the entity's vision, which is 5, 10, 15 years ahead. Same thing when you talk about the mission. What are you trying to achieve in future? So how much time have you taken as an ITC student to say, I want to make a decision today, but when I look at the structure, the organogram of an entity, where am I supposed to be for me to make a strategic decision? Which means if you are thinking as an operations manager, or if you are thinking as a management employee, you are not yet thinking at strategic level. So when you see a strategy question, you only have got one role to play, which is which position are you in the organogram? You are the what? You are the CEO. So if your response or your answer talks about day to day, automatically that answer is off. Because strategy should be talking about future. If you talk about day to day, you're not answering the question. So the question now is, how much time have you dedicated between now and 28th February to say, you know what, today I'm the CEO. I want to focus about the future. Now, if you're the CEO of a company which is in Zimbabwe, what are the things that you'll be thinking about? What will you be thinking about? If you're the CEO right now of Old Mutual, or if you're the CEO, let's take a small company, if you're the CEO of CA, what will you be thinking about? So if you're worried about pass rates, if you work for CA, you are not the CEO. You are the operations manager. Makes sense? If you're worried about the fees for next year, for 2020, how much would you be charging? You're worried about operations. The CEO should be thinking about what? CA 2025. What is the type of CA that should be producing? Same applies with if you are working for Old Mutual. Old Mutual is selling insurance. Which means if I'm selling insurance, I should not be focused on risk today. I should be focusing on risk 5 years from now. Now, what is risk 5 years from now? We're operating in a digital world. Well, so what is the risk that the accountant today might be replaced by a machine? So what insurance should we be buying if you're an accountant today? Does it make sense? Whilst the operation manager is not even worried about 5 years from now, operations manager is much more worried about your insurance that you have paid today. What is the risk that it will be eroded by inflation? Make sense? So now your skills that you need to demonstrate here under strategy and the skills that you need to demonstrate here under management decision making then makes a difference. Because under management decision making, your focus that you have, let me show you what of it. Are you able to identify, analyze factors that influence financial performance of an entity? Financial performance, is it today or future? Today. And are you able to evaluate the design of the entity's responsibilities in the accounting system? The accounting system which is operating today. Or analyze financial performance of an entity and makes and evaluates recommendations for improvement. All of that is talking to now. So in a nutshell, you have 7 competencies that you are working for you to pass ITC. If you are not clear on those 7 competencies, you are at risk. So you need to allocate enough, not equal time, but enough time for each of the 7 competencies to make sure that all of them have been addressed adequate, then that would mean you are now ready for ITC. Okay, happy with that? Okay. I don't want to spend too much time on this, so let me move on to the next chapter. Okay. Then the next part is the expectation at ITC level is there are some things that we expect you to do at undergrad, some things that we expect you to do at CTA, and some things that we expect you to do at ITC. So we put a hierarchy that we have there of skills, which are, by the time we get to writing ITC, be able to remember, understand, apply, analyze, evaluate, and create. So you need to gauge yourself, where are you here? This is A level. This is second year and a bit of some third year. This is your third year and your fourth year in Zimbabwe, if you do it honors in Zimbabwe. Okay, and a bit of some ITs, some CTA. Then from here until here, up there, evaluating, that's your CTA. Then creating there, that's a little bit of some APC. So if you're operating it, what does the standard say? You're trying to remember, this is second year stuff. Which is why if you write exactly what's written in the standard, what do? We put a line going down. And you'll be like, this is dumping, your memory dumping. You get no mark. That's not the expectation. But if you remember what the standard says, and you understand what the scenario says, so you made the understanding of the scenario and the standard, you made the two, then that means you're applying yourself. Then now you're operating at ITC level. So always, I will repeat this, if you find yourself rewriting word for word what's in the standard or what's in the scenario, you are doing nothing. Until you start saying, I have seen the standard, I have understood the scenario, what does it mean? What's your own analysis, in your own words? What's your own conclusion? Then you're now at ITC level. Okay, does it make sense? I'm sure some of these things have already been said when you did your CTA. Okay, so in a nutshell, this is how your marks will be spread in the paper that you're going to write in January. Accounting is going to come with between 60 and 100 marks. Obviously, you know our target. Our target is 100 marks. So accounting is going to come with 100, nothing less than that. Then strategy is going to come with between 40 and 60 marks, which means strategy will definitely be there. 40 to 60 marks will be strategy, which means you need to think like a CEO to the extent of 40 to 60 marks. Then management decision making will have 60 to 100 marks. The reason being, we expect you to operate at management level before you go to CEO level. So management will have more marks than CEO level. So as of today, your ability to make decisions at operational level will give you up to 100 marks. Your ability to extend and think at CEO level will give you the additional 40 to 60 marks. In other words, when you combine, this is found in math, this is found in math, which means when you combine math, math is going to come with more than 100 marks. Clear then? Which means your Finnac and your math, you can't go wrong. If you go wrong in one of those two, you're failing. Your audit and assurance has got a maximum of 100 marks. This is to the extent that they can go. They can't exceed 100. Your taxation can only go up to 100 marks. you have noticed that for your taxation for the last 10 years, they've never reached 100. The maximum is 80. So I know some of us here had 80, 75% in tax. Yeah, that's good. But now you need to think about how can you effectively use those high marks that you're obtaining to get the rest of the other courses. Ethics, like I said before, ethics will be there. Between 20 to 60 marks constitutes ethics. Then communication. 20 to 30 marks communication. Now this will never change. This has been approved at global level. Not at Southern African level, at global level. So, one of the exam techniques that we always talk about is get the easy marks first. You still remember that? Yes. Now, you want 200 marks to pass and proceed to APC. Of those 200 marks, ITC is saying 20 to 30 marks of those is just communication. Are you able to communicate? Do you think communication is difficult? No. So make sure that you get the 20 to 30 marks of communication. Then the next 20 to 60 marks is ethics. This small bracket, this is easy marks, which means you can get to an extent of 90 out of 200. Easy marks. Just by focusing on communication and ethics only, you can get up to 90 marks. Do you see how easy things are getting? Then, get the other 110 from here. Your strengths then depends on what are you very good at. But the rule is always, for all courses, all major 4 courses, audit, Finnac, taxation, and math, you can't get below 40. So you can get 80 in tax, but if your Finnac is below 40, you're out. All right. So let's make sure that we get it is maximum as possible. Now, I will share a little bit of feedback from my January marking experience at SICA this year. I didn't attend the June one, so I'm not privy to the comments which came out in the June marking. Okay. Let's talk about the January, which is where 80% of the people who wrote ITC sent for the exam. Now, here are the things which we generally agreed as markers, that this is what made people fail. So if you repeat these things, you are to fail. Okay. Number 1 is application of knowledge. So the markers agreed that there's a serious problem experienced throughout the examination was that the candidates were unable to apply their knowledge to the scenarios described in the question. Now, take special notice to this. The comment is not that the student did not have knowledge. The comment is they did not apply their knowledge. Which is what I always say. We spend too much time trying to get knowledge instead of applying our knowledge. What you know as of today is already enough. Between now and January 28th, focused on application, not learning new knowledge. Okay. So many responses by candidates were a short list of items. Now, what a short list is you go to the standard, you write down what the standard says. You go to the scenario, you write down what the standard says. Then you conclude and say, obviously. As you can see. Alright. So the then says, this was just pure regurgitation of what candidates may have learned about theory at university, but with no real relevance to the question in hand. People try and force another solution that they saw somewhere else on another question and try to force it on a particular question. So this is a major concern because by the time candidates qualify for entry to these examinations, one would expect them to have assimilated knowledge, at least to the extent of being able to apply it to simplified facts as set out in an examination question. Now I'll tell you what makes us say you have not applied is only one word. If in your application you don't say because, or you don't bring out the why part, then every marker is required to conclude or assume that this is regurgitation of the scenario or the standard. For example, if it's a question on control, and we say, can you discuss if A controls B? If you say an entity controls another entity, if there is power, power is 1, 2, 3, 4. Then you go to the scenario and you say A has got 60% shareholding in B. Therefore A controls B. You have said nothing. You have repeated this standard in the scenario. But what I expect you to do is to say an entity controls another entity if these are there. Now, when we look at the relationship between A and B, A has got 60% ownership in B. Because of the 60% ownership, they're able to influence all the major decisions which are made, which are related to the relevant activities of B. And the relevant activities in this case are 1, 2, 3, 4. Now, because you can't control these relevant activities, that means you cannot control the amount of output which will come from B if you do not have 60%. Then in that case, it becomes quite clear to us that you understand the reason why A is controlling B. It's not just taking facts in the standard and in the scenario. The second part is workings. This one I noticed in your mock one, okay, which I hope raised the number of comments in your scripts. At CTA we were lenient because you paid roughly 24,000. But now, at ITC, no one knows how much you've paid. These are independent contractors marking your scripts. If you do not reference your working, the assumption is you did not do any work. I don't know how much I can emphasize on this. If your working is not referenced, it's not done. So you will fail. At ITC, we don't mark workings which are not referenced. I know I've said this at CTA and people continued to give workings which are not referenced. If you continue to do that, you make your donation to ICAS 6 times. Okay. So it is essential that candidates show their workings and supply details communication to support their figures and their answers. I did not write this. This is straight from side. Marks are reserved for methodology, but can only be awarded for what is shown. Workings should, like the rest of the paper, be done in blue or black ink to ensure legibility. In many instances, workings were performed by candidates but not cross-referenced to the final solution. Now, markers could not award marks as they were unable to follow which working related to which part of the final solution. candidates must ensure that they show their workings and that they are properly and neatly cross-referenced to the final solution. Now I'll share with you inside information. Your paper is marked 3 times by 3 independent markers. So there's no way, even if I know you, if I give you marks for workings, someone else is going to check them out. 2 people are going to check them out. So if you don't do it, you're not going to get marks, unfortunately. And besides, I will not give you marks for workings which are not referenced, because I'm also given 1 chance. If I repeat it twice to give workings which are not referenced, if I do it twice and give marks, then my contract gets. So even if I know you and you are my brother, communication, we talked about communication. These people, candidates fail written questions, requiring calculations than in discussive questions. This has always been the case. Unfortunately, when you are practicing questions between 2010 and 2016, the bulk of the questions are calculation questions. Practice questions between 2017 and 2019, the bulk of them are discussive questions, which means the industry or our profession is moving away from calculations and going more towards discussive. So if you don't practice on discussive, you're going to fail. I noticed on mock 1, most of you did terribly on discussive questions. You can't repeat that on 29 and 30 January. So we need to fix those things. For the sake of time, I'm not going to go through the rest of the content. I believe you get the idea. The second part is, some people address the discussions, but the problem now is they don't drill down. So responses, particularly in financial management, managing decision making and control, strategy, risk management and governance areas are often provided by simply repeating information given in the question. If you repeat what's written in the scenario, if you write exactly, you take your scenario and you start copying your scenario like that, you're failing. What's important is you read the scenario, you interpret the scenario, you give your own ideas. Okay. Then next one, examination technique. Exam technique remains the key distinguishing feature. Now this one is key. When people were answering their own requirements. And I've always emphasized, understand the required. So, provided a discussion where calculations were required and presented financial statements, where discussion of the appropriate disclosure was required, it was just a nightmare. When people just give you what they think you want. All right. So I hope some of those things will help you in terms of dictate what you should be focusing on. Okay. So I'll briefly share a little bit of what has been examined for financial reporting in 2019, 2018, and 2017, so that you see the nature of the question. Right, June 2019, Finnac came in both paper 3 and paper 2. Paper 3 and 34 marks, which was a review question of IFRS 3. So there was journal entries, IFRS 3 journal entries, review, not prepare, but review. Now remember, when you're reviewing, there should be a thought process and a why you're saying it's correct, why you're saying it's wrong. But your major emphasis is, if you are reviewing, you're not focusing on good things, you're reviewing, focusing on what has not been done well. Then paper 2 had new standards. IFRS 15 and IFRS 16 leases dominate. Then it had related parties. I already mentioned why related parties were common in 2019. Then it had IS 8 an error note, and then a bit of some IFRS 2 and IS 19. IFRS 2 always comes hand in hand with IS 19. Because remember, when you talk about share-based payments can either be to an external party or to an employee. You still remember that? And 90% of the time, the share-based payments will be incentives to employees. So it always comes hand in hand with IS 19. Now, what I liked best about paper 2 was, paper 1 was 34 marks review. Go in detail. Paper 2 was very short marks. 6 marks, 14, 12, 9. Very short questions. What made people fail paper 2? People did very well in paper 3. Paper 2 they failed. The reason why they failed was they were waffling. For 6 marks, people were writing 1.5 pages, which is exactly what we did with mock 1. Mock 1 it required A to I. For 7 marks of discuss the correct acquisition date, people were writing 2 pages. So you need to learn the skill of when do I go to town and when do I focus on application. Okay. And I've said it before. If the number of marks are like many, go to town. If your marks are below 10 marks, don't go the traditional way of state, apply, conclude, I skipped something. And recommend. Don't do that. If your marks are below 10 marks, apply, conclude, and recommend. Don't state. Okay. So for those 7, on your mock tests, for those 7 marks, 6 marks, if you found yourself going, power is, control is, for 6 marks, you're going the wrong way. Then your January, paper 3 and paper 4, it had IS 38 and IFRS 15 again, revenue was common there. Now look at something common, related parties again, disclosure. And I talked about it again. You need to know the disclosures of every standard that you do. Because you need to know where your profession is going. Your accounting systems are doing the preparation of accounts, but they can't disclose. So much of your work now is no longer much of doing the preparation, but now doing more of the analysis and disclosure. So if you go to ITC and you don't understand disclosure, you're in trouble. Okay. 2018, cash flow 7 marks, then financial instruments 90 marks, and intangible assets again, then your leases and income tax is there. Now, I want us to show you how they were examining these. Now look at something which is interesting here. We're coming from 2010 to 2016, where it was calculate this, calculate that, to more of disclose, review the policy, discuss, then 2 calculations. Then this whole paper discuss with some journal entries. Then this paper discuss journal entries, discuss a bit of some calculations, discuss again journal entries. You go down to 2017, which is the first time they started doing that. So discuss. So if you can't discuss, already you know your fate. Okay. So am I clear on your areas of emphasis between now and January? Okay, great. I don't want to spend too much time here. So if allow me, I want to jump to your mock tests. All right, is that okay? Great. Your mock, I didn't do your mock in the standard ITC manner, because the standard ITC manner was supposed to have integration and a bit of some ethical related questions, okay? But this was purely financial reporting. The second mock that I'll give you to have a bit of some integration. Now, the mock was divided into two, 60 and 40 marks. So I'll go through these expectations that I had with you. There are only 2 people who got 50 and above. 2 only. That's bad. Okay. Just be reminded that you need to sign some evaluation forms for the class that you've attended up to now. This from ICAS. Okay. So whilst you're writing, let's focus here. Now here's the thing. What I was looking for, number 1 was, you were given 30 minutes to read the scenario. So let's brainstorm together, because I want us to pull together, to pass together. During the 30 minutes, what was your focus in the 30 minutes? What were you doing? Share with me so that we help each other. What were you doing in the 30 minutes? You were trying to understand the scenario, great. How were you trying to understand the scenario? How exactly were you trying to understand the scenario during the 30 minutes reading time? Hello? Come on guys, talk to me. What is the business model? Okay, great. Did you know that you were writing Finnac? You knew? That's a problem. Because when you are reading the scenario, you should never assume that you're writing Finnac. I know it was paper for, so you were like, Finnac never came. So this should be Finnac. Okay. But I intentionally designed that scenario to make it look like it's audit when you're reading it. So we're talking about working papers and stuff. This is exactly what you're going to get at ITC. So never assume which paper you are writing, because it's dangerous. Now, your 30 minutes, I've always said your 30 minutes, this is not the time to anticipate. This is the time to be like, talk to me. So what are you saying? How many companies do I have? What is your business model? What do you do? What are the issues that you have? So what I expected from you during the 30 minutes reading time to grasp was, number 1, I have got 2 separate questions. Question 1 and question 2. Then question 1. Question 1 has got a company which is called Generator. And this is a group company. It has got how many entities? It has got 2 entities. And the parent company is the 3rd entity. So Generator invested in diesel and it invested in petrol. Now, when did they invest in diesel? For me to analyze that, the first thing that I need to know is, which year are we in? So the scenario then said we are dealing with a 2019 financial period, which starts in January and it ends in December. But now, diesel was acquired before 2019, confirm? It was acquired in 2018. But something happened with diesel. We acquired 40% in diesel. Then we spent the whole of 2018 with 40%. But we had 40% in ordinary shares and we had another 20% in convertible shares. You still remember that? Now, these convertible shares were not exercisable as of 2018, but they were exercisable as of 1 July 2019. And Diesel had the right to exercise as of 1 July 2019. So what I'll do as a starting point when I'm reading this is, I will put a timeline. And I've always talked about timelines before, which is, I'm dealing with the timeline which is the year 2019. But the story about Diesel starts in 2018. So I've got January to December of 2018. And I've got 40%, which is coming in. 20% is not yet exercisable. So I'm not worried too much about this. Again, it's 2019. I'll go to 1 July. On 1 July here, this is the time when it became exercisable. So what I'll do here is I'll write, I've got exercisable shares of 20%, which will make me like 60% voting rights, not actual rights, but voting rights. So from my understanding now here, they say these 40% managed to give generator significant influence over diesel. Okay? Which means between this period and that period, this was a source. Now, when you go to this period, because the 20% was now currently exercisable, this then became a subsidiary at this point. But when you move from an associate into a subsidiary, we call it step acquisition, which means IFRS 3, paragraph what? 40? 42. All right. Applies it. Now, this is not the time to be opening IFRS 3 during reading time. You don't care about what paragraph 42 says, favor, blah, 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 blah. You don't care about that. It's not important. Because you don't know if it's part of the requirement. But you simply understand. Now, right, we move into, so that means from this period to the end of December 2019, this was now a subsidiary. So we're now consolidating where here it was an associate. But when you're consolidating, what percentage are we consolidating? Consolidating 100%. Remember, subsidiary is consolidated 100%. But our stake in the share of profits is? Yeah. The scenario never said they exercised. No. It said they were exercisable. Which means going there, we still hold 40%. So when we are attributing, we're going to attribute 40%, but we're consolidating 100%. Make sense? Okay. That's all that I wanted you to understand here. But now what's important about Diesel now is, Diesel has got it. Yes. I repeat with what part? Let me come close, I can't hear. Okay, that's fine. Right, so the question is, in terms of percentages here, what's going on? So I was saying, when it was an associate, equity accounting says you take your share of profits, and we own 40%. So I'm gonna take 40% of every line item. But the moment it becomes a subsidiary, IFRS 10 does not talk about share of. IFRS 10 says you consolidate everything, which means you take 100% of every line item. But when I prepare a consolidated P&L, from revenue to profit after tax, it's 100%. Then after profit after tax, I've got attribution. attributed to the parent and attributed to NCI. Still remember? Now I'm saying, because of your understanding of the scenario, you need to know how much is NCI here, how much is attributed to the parent. So the scenario never said they converted the 20%. It only said it was exercisable, but it's not yet converted. Which means as we get into subsidiary, we still own 40%. So we are consolidating a subsidiary that we've got 40% stake in. Which means my attribution, when I finish my P&L, when I say attributed to the parent, I'm only attributing 40%, not 60%. Happy then? Okay. Now, one of the most interesting things which are here is, because of this war timeline, I understand that my current year that I'm working with is 2019. And in 2019, this is when the acquisition date is coming through. This is when the state acquisition is taking place. Now, if state acquisition is happening here, what I also need to understand now is, this is an acquisition which is happening during the year, not at the beginning of the year. Which means the profits from January to June, they don't belong to the group. You agree? It's only the profits from July to December. So I need to understand now if the profits for 2019 were incurred even. That's part of my understanding. You agree? Now, were they incurred even? They were. The exception of, there's an exception. Did you see the exception? The exception of what? And they stated otherwise. So it's there otherwise. But if you didn't understand that, then there's a problem. You then missed a very critical part of this now. So great. Diana says she's gonna come around in about 5 minutes to collect your evaluations. Right. What's the exception, guys? Did you see the exception? No one? None? Sell off something. There's a sale of a specialized machinery. What is the impact of the sale of the specialized machinery? To the even distribution of profit. What is the impact? When was the sale? In September. Now, was the sale for a profit or for a loss? It was for a profit. So what's happening here is, your understanding is the subsidiary operated from January to December. It had no more operations which generated profits except for one item, which had a profit which was not spread even. Because your profit on disposal happens at a point in time, not over time. Agreed? So which means if we sold in September here, I need to know how much was the profit on disposal of the machinery. So that when I share my profits, what I'll do is, this profit happened when we were together. So for me to know the profit in this side, January to June, what I need to do is I'll take profit for the year, remove profit at a point in time, then the remainder divided by 2. Make sense? That's part of your understanding of this now. let me put figures to this. Let's say the company made 100,000 from January to December. Of that 100,000, there is 20,000 which was as a result of disposal of PPE in September. Outside that one, the rest was made evenly over the months. So if I want to know how much profit was made between January and June, what do I do? Total profit of 100,000. Profit on disposal specific to September is 20,000. The rest was raised dividend. What do you do? So you take the 100, then minus 20 to get 80, then divided by 12. Then you get the monthly. Agreed. Now, the only thing that they didn't do was to tell you that the profit on disposal was not evenly spread. Because they expect you to know that. They expect you to know that if we say we disposed in September, that means the profit in September is profit for September. Why would you? Because why would you call a profit on disposal in September a profit in January? It's not. So profit on disposal is specific to it. It cannot be spread evenly. It will be accounted for in September, but not in February or March or June. Are you with me there? Yeah. So I want you to relook at your script. Did you pick that?
No.
Yeah, we did. All right. Now, let's move on. The other part that I expected you should pick was, when you look at diesel, they gave you a very simple transaction. At acquisition date, IFRS 3 says all assets and liabilities should be measured at fair value. So they say there is an asset which was not at fair value, which was what? What was it? Specialized machinery. You saw that one. Now, if there is a specialized machinery which was not at fair value, what does it mean to the asset which is coming from the subsidiary? The value of this machinery which is coming from the subsidiary. What does it mean? It's undervalued, you agree? If it's undervalued, what's the impact? Because you're required to say prepare the P&L. What is the impact to the P&L? The depreciation is what? Is understated. So expected you to keep that, it's understated. Now here is what then made things complex. That specialized machinery, which was in the subsidiary, was there on 1 July. But on the 30 September, that specialized machinery was then sold from the subsidiary to the parent. You saw that transaction. What is the impact of that? What is the impact of that?
From 30 September, depreciation was more.
Right. From 30 September, this is great. It says from 30 September going to December, depreciation for the machinery was overstated. Remember, we said from July to September it was understated. Now all of a sudden it's overstated. Did you pick that? Why is it overstated?
It's overstated because we moved it from one group, from one entity in the group to another entity in the group at a profit.
Ah.
So it's now overstated by the revaluation
Yeah.
to fair value less the profit. Sorry, the profit less the revaluation.
Okay. Now let's talk about the profit. That profit is called what? Unrealized profit. Which means we can't be depreciating a value which is unrealized. Makes sense? So we shifted from, we took over an asset, which we said at subsidiary level it's here. At group level it's supposed to be here. Makes sense? Which means each time the subsidiary was depreciating, they were not depreciating this extra value which existed. And this was from July to September. Now what then happened was, this is the subsidiary, this is the group. Subsidiary then sold this asset to the group at this. So all of a sudden you are shifting from a subsidiary being understating depreciation to overstating. Makes sense? So now the impact to your financial statement would then mean when you are consolidating June to September, increased depreciation. September to December, reduced depreciation. Are you with me? Okay, where did I miss you?
I understand what you're saying, but I can't visualize it.
Can't visualize the journal. Okay. So let me put this in figures. What was going on was, we have got an asset which is in the subsidiary at carrying amount of, let's say, 10,000. But the group is saying this asset is not worth 10, it's worth 15. So at acquisition date, what we do is we do an adjustment of 5. You're with me there? To put the asset from 10 to 15. Now here's the problem. Who is depreciating the asset? Subsidiary. Subsidiary will depreciate based on 10, which means the extra 5 that you created, subsidiary is 10. So that means from July to September we had to supplement our depreciation because the subsidiary was only getting to depreciating 10, a carrying amount of 10. Yet the group is saying, no, the carrying amount is not 10, the carrying amount is 15. So you've got another 5 that you're not depreciating. You happy with that? Now we get to September. In September now, the subsidiary then says, group, you say your carrying amount is 15. I will sell you this asset for 20. So all of a sudden, this asset moves from a carrying amount of 10 to a carrying amount of 20. Now at group level then says, how can you jump from 10 to 20? Because group is saying the value is supposed to be 15, not 20. So you've overstated by 5. Makes sense? Because remember, the group is always right. So by selling to the group for 20, you've overstated your asset. So the group then says, when you are now depreciating, our financials are depreciating 20 instead of depreciating 10, instead of depreciating 15, sorry. So that means we've got an extra 5, which should not be there. So from September to December, we are now removing depreciation. Yet from July to September, we were adding depreciation. Is that clear then? Again, I'll ask, did you pick them? Why? All right. So that was the diesel subsidiary. We've done another subsidiary which was called petrol. Now, petrol is a different scenario. What's happening with petrol is petrol was acquired not in 2019 but rather in 2018, 80% shareholding. The only thing about petrol now is with petrol, we acquired 8% in 2018, then in 2019, we sold part of our 80. So we moved from 80 and we went down to 60. But we still retained control, which means we've got a change in NCI for petrol. But petrol has got its own subsidiary which is in Botswana. So when petrol consolidates the subsidiary in Botswana, it translates these accounts from Pula to Zimbabwean dollar, which creates FCTR. So now, that means in the books of petrol, if you go to the statement of change in equity, you expect to see an FCTR account. Agreed? Now, which means if generator owns petrol, then generator has got a share to that FCTR as well. Agreed? Now, if we lose 20% from the 80 going down to the 60, our FCTR, when you look at our statement of change, it has got share capital, distributable reserves, which is the retained earnings, and non-distributable reserves, which are your FCTR, your revaluation reserves, your mark-to-market reserves, all the other reserves. Then it has got NCR. So all the distributable and non-distributable reserves belong to the parent. Is that correct?
Yes.
Which means they resemble 80% as far as petrol is concerned. Agreed? Now, if we lose 20% of the 80, can we still hold all the reserves at 80%? No, we can't. Which means the idea there was by losing 20%, the reserves which we are saying belong to the parent should go down by the 20% loss. Because that 20% loss is being transferred from the parent to NCR. You with me there? That was the only concept, as far as petrol is concerned. Done. So we then get to a stage where we're saying you have all right, the coup already happened, so let's continue. As long as they're not shooting at us, we've got ITC to be concerned about. Yeah. So, I want us to jump to that. Unless if you want to go outside and find out what's happening. Right. Now I want us to go to the scenario. To the requirement. And I want us to look at how much impact would understanding of the requirement have on you answering the requirements. Now, I'm assuming everyone has got their requirements. Great. Here we go. Question 1 is part A to D. Let's start with A. A said with reference to working paper C2. C2 was the one which was giving the background about the acquisitions. Justify with appropriate reference to accounting principles that Generator Limited does not obtain control over Diesel Limited on 1 January 2018, but instead obtains control over Diesel on 1 July 2019. The marks or the effort that you should put should be equivalent to 5 marks. And communication with its presentation will give you an extra mark, which is 1. Now let's talk about this. Everyone knew now I'm getting out of here. Right, so I was saying everyone knew that the acquisition date is 1 July 2019. Confirmed? Everyone knew that. The only problem was, what should I write for 5 months? That was the major problem. So I've got 2 types of candidates. I've got people who wrote half a page to answer this, and I've got people who wrote 1.5 pages to answer this. Now, let's agree. Theory questions, we agreed that the manner in which you answer theory questions is state, apply, conclude, and recommend. Agreed? Should we go all the 9 yards for 5 marks? I don't think so. Because if you're gonna state, remember, for you to know the acquisition date, you're gonna say the principle is the acquisition date is the date at which an entity obtains control over the other. Control is when one entity has got power over the other. Power is exposure over variable returns. Exposure over relation to over relevant activities. Then you go, relevant activities are, you still remember that? This is for 5 marks. You can't do that. The signal here was go straight and apply. Which means for us to conclude on the acquisition date, we need to determine at what stage generator controlled diesel. You go into application. Let's look at what constitutes power. So what are the rights which you think generator has over diesel? So start by applying the rights first. Generator has got voting rights, which are to the extent of 40% as of 1 January 2018. And they also have 20% relating to voting rights, but which are not yet currently exercisable. Therefore, as of 1 July 2018, generator did not have control, and they did not have enough rights to constitute power to control. Now, what's happening on 1 July 2019? The voting rights became exercisable. The 20% voting rights became exercisable. Now, by them becoming currently exercisable, it means they became substantive for voting purposes, which means generator could now utilize the 40% already existing and the 20% currently exercisable for the purposes of making a decision. And this decision will be over the operations and financial policies of diesel, which are the relevant activities. Therefore, it's only at 1 July 2019 that generator obtained control over diesel. Done. So if your script right now has got definition of power, definition of relevant activities and all of that stuff, you wasted a lot of time. Then you could do that. Yeah. Yes. I could still give you half a mark, half a mark, half a mark. Yes. Now remember, if you're not sure, I've always said this. The process is state, apply, conclude, and recommend. If you're not sure about what to do, apply, conclude, and recommend. Because when you apply, you cannot apply something that you're not stating. So in the process of applying, I can see what you're stating, so I'll give you marks for stating, even if you don't state. Make sense? So, your safest way, if it's 10 marks and below, it's apply, conclude, and recommend. Yeah. No, it was not. 1 September was not in the picture. Yeah, so if you went on to get to September, you're just looking for what to do in the exam. Like, guys, I'm done. I don't know what to do anymore. Right. So these 5 marks, I didn't expect people to lose these marks. Did anyone get 5 out of 5? Yes. You did? Okay, great for you. Got below 3 marks for this one, you're in trouble. Now, B, C, and D. I want us to talk about something here. Exam technique. Exam technique also talks about which requirements link to the other. So what my exam technique is telling me is B has got 35 marks. If you don't do B, you're gonna fail. Agreed? So you need to do B. But you cannot do B before you do A. Because B is about, let's consolidate. You can't consolidate before you know what's the acquisition date. So you have to do A first before you do B. Now let's look at C. C says, with reference to working paper C2, assist your client by preparing the pro forma consolidating journal entries to account for the sale of the 20% interest in Petrol Group on 1 July 2019. Now I already know that the sale of the 20%, it's a B96. Confirm? B96 is a transaction between shareholders, am I right? Which means it never goes or it never gets into the P&L. So C will never affect B. Am I right? Because it's a transaction between shareholders. Which means I'm okay with doing B before I do C. Let's look at D. Discuss the implications of the diesel and petrol group transactions on 1 July in the preparation of the consolidated statement of cash flows. This is now a separate statement. So which means at this point I can go ahead and do B. But before I do B, do you think there are easy marks on C and D? Because once I get into B, I know some people are going to be doing analysis of equity here. And they're going to get stuck here. So would you start with B, or do you start with C and D and then go back to B? Yeah, I'll tell you what I'll do. When I look at D, D is discuss the implications of the sale of the 20%. Not the sale of, discuss the implication of the diesel and petrol transactions on 1 July 2019. In the consolidated statement of cash flow. So what D is saying is, for 7 months, tell me what is the impact of a step acquisition and a change in MCI in the statement of cash flow. That's what it's saying. Do you know the impact? Do you? It's also. Let me start by a simple one. The acquisition of the subsidiary. What type of consideration was there? Was there any type of consideration? Huh? Okay, there was a consideration. What was the consideration? Did the company pay any cash on 1 July? No. It was simply rights that they had which became substandard. So there was no outflow of cash. Agreed? So there's no impact. You don't need to talk about that because they didn't say talk about the impact on anything which doesn't have an impact. They said talk about those which have got impact. So consideration was not necessary to talk about here. You jump from there. If you acquire a subsidiary, what impact does it have to your cash flow statement? When you are preparing your cash flow, let's talk about that. What do you do when there's a subsidiary acquired during the year? You do what? Yeah, what do you do?
I think the cash flows between 1 July and 31 December
Yeah.
are the groups.
Okay.
So you account for the movement between that period. And that's
Agreed. So how do I know the cash flows? Don't think too hard. Think about you're preparing a statement of cash flows. Subsidiary acquired during the year. You take the cash and bank balances. And what do you do? Thank you. So any cash which is in the subsidiary becomes a cash inflow. You still remember? That's what they wanted you to say. What else do you do? What else do you do? Don't think too hard. When you are preparing a group cash flow statement and there's a subsidiary acquired during the year, what do? You what? Working capital balance, what about them? Great. So she says there are balances that already exist for certain line items. She says working capital. So when I look at the group, for example, one of working capital is receivables. So when I look at the group, I may have started with receivables of 10,000 and ended up the year with receivables of 50,000. The increase from 10 to 50 is not necessarily cash injection, but some of it might be a balance that has been included as a result of consolidation. Agreed? Is it only limited to working capital balances? No. It's to what impact? What extent? To what? To all. That's all they wanted you to say. That the impact is for every ledger account, there's going to be an increase as a result of a new balance coming in, which is non-cash flow. Don't you know that? You do. Why didn't you say it? What else do you do? What else do you do? Like I said, don't think too hard. You are preparing a group cash flow statement. What else do you do when you're preparing a group cash flow statement? And there's a subsidiary acquired. What else do you do? Here's time. You do a disclosure. What does the disclosure do? What is the purpose of that disclosure? yeah. In other words, it what?
The determination of investment cash flow.
The determination of investment cash flow. How do you find that one? What does it do?
It shows,
That disclosure is meant to do something.
I think it shows how we came up with the balance in the cash flow statement.
By doing
By showing how what we paid
yes.
and what we paid for.
Thank you. That's all. So part of the impact to the cash flow statement is we will need to do a disclosure which reconciled the cash which moved in as a result of assuming the balances of the subsidiary and the cash which went out by paying the people who sold to us, then by getting to a net amount. That's the impact to the cash flow statement. And you know that confirmed? So do you see your 7 marks coming now? So they've started with D, because D is very straightforward. Because remember, for now we've already done 3 or 4. This is relating to diesel only. What about petrol? If there's a change in NCR, what is the impact to the cash flow statement? Change in NCR. We have missed one other item on diesel. One more item on diesel, very critical. One other item. Don't think too hard. Think about when you look at generator. What happened when generator shifted from associate to subsidiary?
We recognize good work.
You recognize goodwill. What else did you do? You did a fair value adjustment. Does any of these two affect your P&L? Which one? Fair value adjustment. If it affects your P&L, does it affect your cash flow? How? It's a what? It's a non-cash item. So under your operating activities, we are supposed to adjust for the fair value adjustment which was done at step acquisition stage. Is this difficult, guys? So what I'm trying to reflect here is, all these things that we're talking about, there's nothing new. There's nothing that we did not do before. But the main challenge which is there is for us to think 360 and be like, what is the impact based on the document which is here, based on what I already understand. And I'm not saying for this mock test I expected you to pick all of these things. But what I'm saying is between now and 28th of January, these are the things that you're supposed to be practicing on. So what then happens is if you go back to your desk tomorrow and you take your module and your standard and you start reading again on investment properties and it arises when this happens and blah, 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 you will still not pick these issues when the exam comes on the 29th. You will only pick these issues through experience. You need to do questions, you need to practice so that you sharpen your memory to look out for things. Your technical is enough. Okay, are we good there? Okay, I know your mind will always be like, I'm not yet good, I'm not yet good. I think they gave me someone else's marks. They were your marks. Okay. I'm running out of time, so yeah, I'm running out of time. Now I want to do a very quick look at these 34 months, okay? I promise you'll be out of here by 8:15, all right? So I want to do a very quick look at those 34 months. Those 34 months want you to prepare a consolidated statement of P&L. Now here's the thing. You go, this is my P&L, consolidated P&L. I'm going to need my revenue, I'm going to need my cost of sales, I'm going to need my GP, I'm going to need my other income, I'm going to need my other expenses, I'm going to need my dividend, profit before tax, the tax line item, profit after tax. There are certain figures which were already given. There were two options which were there. Either you take generator plus diesel plus petrol, or you take the total and you remove. Make sense? Okay. So whichever way that you took, I'm still fine with either way. So let's say we're going to go, what is the revenue of generator? Plus, diesel was acquired during the year on 1 July, which means revenue for diesel should be 50% of what's sitting in diesel. Plus petrol. Petrol, we owned petrol throughout the year, okay? So plus the 100% of petrol. There we go. They don't stress too much about intra-group transactions. Leave it like that. Go to cost of sales. Same thing again. Take generator cost of sales plus 50% of diesel plus 100% petrol. You do the same for income expenses, dividend going down. By doing this, you've already taken half. They're sitting like in 5 months. After that, you then go on the work which now needs to be done. What are the things which took place which I need to be careful? So based on my timeline, this timeline becomes important. This timeline tells you what you've just done. So I'll go, the year starts on January. From January up to June. I don't see an associate here. So what I can do is under income here, working one. Take this figure that I have here, set it on working one, and I say add the value of the associate, which is 40% times the profit which is remaining. But because I understood the required, I now know that I'm not going to be 40% of profit, because the profit was not even. It's 40% of, what was the profit for diesel? How much is it? 285 minus, what are the costs for the asset? Asset sold? The specialized asset disposal. It was 287. 23. So 287. What is the carrying amount? 140,000, which gave us a profit of 97,000. So 285 includes 97,000, which is not spread even. This is in September. So I take 285, but is 285 profit before tax or after tax? After tax. Is 97 gain before or after? Before. So you can't take this into subtract this. means I need to take 97. Let's 25.75. Then remove it from this. Then multiply by 40 to get the share of profits. Okay, the income is good. And I have an income. You with me? So I've done the first part, which is from year to year. You tick this phase. You get to this part. There's a step acquisition here. What happens when there's a step acquisition? There should be a fair value adjustment. Agreed? Is the fair value adjustment here? In this? Not yet. So under my income on working one, I now have share of profits. I also add fair value adjustment. How do I get the fair value adjustment? Previously, this was an associate. How do you account for an associate? You start with? What do you start with? Cost. Do you know the total? This which was 400,000, if I'm not mistaken. Then this was acquired on 1/01/18. We want to get to 1/07/19, which means the whole of 2018 there is share of profits in the sins. Confirm? How do I get that figure? How do I get it? We have open and retained earnings for generator. For diesel. How much? 480. 480. We have retained earnings on 1 January when we acquired. 450. There we go. So this is the profit which was made in the sense. Multiplied by how much? 40%. Plus the current profit in the current. How much profit do we make in the current? 385. Less the 97 which was made that side of the year. To get to the profit which was made for the year excluding the 97. Divide that by 2. Give the profit which was made from January to June even. Multiply by 40%. Gives you the share of profit. So do you see the marks coming through? But the skill that I want to talk about is when you are holding your piece of scenario like this and you're trying to figure out what to put in your script, you're not going to know what to do. I'm not using this. I'm using my timeline. My timeline is telling me what to do because my timeline is telling me that from year to year, you need a share of profit. When you get here, you need fair value adjustment. After you get here, you get your fair value adjustment, you then jump into a subsidiary. There could be a bargain of purchase here, which affects P&L. So I do a test of bargain of purchase, which also gives me marks. After I do my bargain on purchase, I also know that there could be some fair value adjustments which should be done on things like land and buildings and stuff like that, which is going to impact in the subsequent period. So my flow is not based on the scenario. My flow is now based on the timeline that I've put in place to tell me exactly what's hitting the P&L. We're good there. So, 2 questions that I have for you before we go. The first one is, we've talked about a lot of things. Is there anything new that you didn't know before? No. Second question is, did you use the same strategy in answering the same question? And do you think if you changed the approach, you could have gained more marks than what you got? Exactly. Which is exactly my point to say outside this class, the whole of the ITC board course, there's nothing new that I'm going to come and teach. Because you already know everything else. What I need you to focus on is the approach. We are now at the time at which we say, get as many marks as possible. How do you do that? You need to have a good approach to answer the questions. So we're going to break off tonight. We're going to come back on the 6th of January for critical thinking session. By the time we come back, I need these things to be ironed out. So that by January, we're not focusing on approach, but we're not focusing on critical thinking. Happy? Awesome. Okay. Unfortunately, I didn't have time to look at question number 2. I think question number 2 was very straightforward. It was discursive in nature. For question number 2, I think what a lot of people didn't manage to do was utilize the material that is available to them. For example, requirement number E say discuss with reasons at which amount the bonds should be accounted for in Joker Limited. Now, if you remember question 2 gave you 2 investments. An investment in a bond and an investment in equity. You still remember that? Then it said the investment in bond. The guys overpaid. They paid 500 and what? Don't still remember the figure. They paid more than the fair value. So the question now here was, discuss with reasons which amount should be accounted for that bond at the date of acquisition. And it was very simple. What we simply had to do was go to IFRS 9 because this is a financial instrument. Go to the section which covers initial measurement because they said at what amount. So it's measurement. So go to measurement. It's measurement on which they say 1 January 2018, which is the date at which it was acquired, which means it's initial measurement. So you go and look for initial measurement. And if you go to IFRS 9 initial measurement, it's covered on which paragraph? Chapter what? Chapter 5. Chapter 3 covers recognition. Chapter 4 covers the categories of classification for measurement purposes. Chapter 5 then covers your measurement. While chapter 6 goes on to cover your impairment. This you should know. So I was going straight to chapter 5. The beginning of chapter 5, this is chapter 5.1.1. Now chapter 5.1.1 talks about you initially measure all financial instruments at fair value. You go to the paragraph which is just after 5.1.1. It then says, in certain circumstances, one may pay over or under the fair value. So ideally, the transaction price should resemble the fair value. But sometimes the transaction price may not be the fair value. So if that is the case, this is what you do. Which was this case? And my question is, did you look at that paragraph? I know that's very straightforward, which was simply, if the transaction price is not the fair value, what you simply need is you need to discount all future cash flows to come out to the present value. That becomes your initial value of your financial instrument. Done. So this was quite very easy. But what I'm saying is, sometimes, I'm not saying you should have known. But what I'm saying is, when you don't know, you need to know that your standard covers it. Because there's nothing which will be examined here, which is not in the standard. So if you don't know, go to the standard, and the standard is quite clear. You don't start by flipping the standard and you look for where is it covered. You go to the table of contents. What do I want here? I want initial measurement. Table of contents, where is initial measurement? Chapter 5. Go to chapter 5. Tells you the answer. And the second part was discuss with reasons which category the bonds should be classified on 1 January 2018. I know this was tricky, because it talks about classification, and I know that 90% of the class went on to apply IS-32, so they were like, is this an asset? Or is it liability? Or is it equity? Because that's the classification part. Okay. But what we missed here is, it said, you are dealing with an investment. An investment has got only one class, which is a financial asset, and categories for measurement purposes, which are also deemed to be classification. So you had to be very clever here to say, we can't be talking about categories at financial asset, to say, is it a financial asset or not? Because there's only one financial asset. So if you want me to talk about which categories are they, this is not IS-32, it's IFRS 9. For third one, H and I think H and I will be very straightforward. Okay, yeah. Now, so in conclusion of this class, do you know what to go and do from the time that you get out of this class until we meet again on 6th January? You know what to do? Or do you have an idea? Okay, thank you very much. Please go and enjoy. No, there's nothing to enjoy. Please go and study. Okay, I'll see you on the 6th of January. If you're traveling, please travel safe. If you want to drink, sit on the passenger seat. See you next day.